Are you in the VAT club? I know, it's painful, isn't it? One of the most common questions I get asked if somebody's in the VAT club is, can I spend the VAT money I've got? Well, no, you can't. It's not yours. It belongs to HMRC. Small businesses approaching the VAT threshold is a painful cliff edge. It's something that many of them dread. There's loads of forums that I partake in, and one of the most common questions is, I'm coming up to £90,000 of turnover, do I have to register? And it's the reason why you see loads of small businesses closing on a Wednesday. They're close to it. It's better to lose a day's trade than cross over. But if you do cross over, there's certain disciplines that you're going to have to make sure you put in place from day one. My name's Rob Newman. I am one of the partners at Carter Collins & Meyer. We are a general practice firm of accountants in Greater Manchester, working with clients across Cheshire and Lancashire. And this is an area that many small businesses struggle with. They're getting close to that VAT threshold, which has been frozen now for years and years. Everything else has gone up in price. They're getting close to it, and they're looking at a hard cliff edge of when they cross over, they're now in VAT. At first, that can be somewhat appealing in that they're suddenly getting potentially an influx of extra cash, and they're parking that cash within their general day-to-day bank account, thinking they're better off than they actually are, because that's the number one lesson of this. Your bank account is always misleading. It's why you should have a bookkeeping system. It's why you should actually stay on top of things. If you are in that club and you have been able to raise your price, because that's often one of the issues that small businesses have, they can't. They have to suck up the whole VAT themselves. But if you're now 20% up on things, your bank account is looking really healthy, and you are approaching a VAT quarter without thinking of it, you can suddenly find you've got a significant bill to pay at that quarter's cliff edge without having the cash there. So the number one thing I would say to you is, if you are VAT registered and you are a small business, put money aside. If you've filed a few VAT returns, you can work out what your effective rate of VAT is. Your effective rate of VAT is the difference between what you charge and what you are buying, and the difference between the two. If you're new to VAT, a good indicator of the effective rate in your business would be the flat rate charge. The flat rate scheme allows you to pay a flat rate of VAT, not working out the difference between what you charge and what you sell. The flat rate gives you a percentage. It's a big, long, hefty table. You can find it online. Your accountant can find it. And even if you're not in that particular VAT scheme, it's a pretty good indicator of how much VAT it is you're going to pay over. For example, you could have a business that has a 12% flat rate. That means every time you sell something, 12% of the total sales value of that thing should be separated. Because that's the key lesson. Separate it early. Whenever you sell, stick a lump of that money into a separate bank account, a pot. Lots of accounts, particularly people like Monzo, allow you to have pots of funds. Even the high street banks will let you have separate bank accounts. And I would urge all small businesses to take that fixed rate VAT bit and put it into a separate pot. That way they can have complete visibility at any one time, know what the VAT is likely to be, and not fall into a problem when they actually get there. If you have spent the VAT money and you have not put it aside, and you are now facing a VAT quarter without things, don't stick your head in the sand. The earlier you act, the earlier you get on top of it, the more gentle this process will be. No one likes dealing with HMRC. Everybody finds it an intimidating process. But they want you to be in business. HMRC are not your friend, but they're not your enemy. They're more like your landlord. They're there as somebody that wants to keep you going, wants to keep you in business, but you are going to have to make sure you pay. If you contact them early and arrange what's called a time to pay, taking the amount that is owed and splitting it over a period of time, you're going to get a far better treatment than waiting for something that has not been filed and an assessment has been raised and a penalty points have been issued. Speak to them. Keep the records strong. Keep them ongoing. File things regularly. If you don't understand what is happening within that VAT account and why you are getting where it is, make sure you sit down with somebody that does, your bookkeeper, your accountant, Ask them how it's being calculated and what's going into it. We do find on occasion that we don't understand your business enough and we have misallocated certain things within it. Only by speaking to you and knowing what some of those transactions actually are, can we actually work out what your VAT status should be. And again, if it is being calculated wrong, it can be corrected, it can be adjusted, things can be put right. But the earlier you do that, and with the more records that you've got and the more support for what it is that you do, the better the reaction you're going to get from HMRC. Now, depending on the size of your business, I would say to you, VAT is in some respects a commercial decision. If you are very much a one-man band business and you're happy with that, and you're happy with the level of turnover that you've actually got, that decision to close on a Friday or a Wednesday or not take on that extra piece of work can be something that is perfectly justified. You don't have to cross over that £90,000 threshold. For what it's worth, I read the other day that if it had kept pace with inflation, it would now be more like £150,000. Now, £150,000 would actually take out almost all the small businesses that I know. But it was a political decision that has been made. It raises billions for government. But it's not a club that you necessarily have to join if you are creating a lifestyle business. If you do decide to cross over it, you probably do need to push all the way through to 150, 160, 170,000 pounds to actually be in the same position as you were beforehand, unless you can just pass the VAT straight on. In my own particular profession, I became VAT registered on day one. Most of my clients are VAT registered. Some of the smaller end of sole trade isn't, but I just pass the VAT on. I quote my prices without VAT and say plus VAT. If you're a cafe or a hairdresser or a to-consumer business, that is often not as easy to actually do. And I get why the decision to not do it is there. But if you have been forced into it, as I say, to reiterate the earlier message, make sure you put a chunk of that money aside. Make sure you have records supporting what you're doing. Make sure that you have an up-to-date position. Do that weekly. Be on top of where it is that you're going, be on top of the transactions, and I urge you, put a chunk of money aside. The flat rate is often the best way to do it. Now, if you're sat there worried that any of this is affecting you, I'd be delighted to help. Reach out to us at Carter, Collins and Meyer. Our website is uk-ccm.com. We help lots of small businesses across Greater Manchester, Lancashire and Cheshire, and myself, Rob Newman, or one of my partners, Fiona or Andy, would be delighted to help you.